Welcome to IGCSE Accounting. In this video, we are introducing Sales Journal. All right, what is Sales Journal? A book that of prime entry used to record credit sales. All right, credit sales means that during the transaction of the sales, there is no money involved. The customer promised that I will pay you later, so it's considered a credit sales, not yet paid. Right, and let's have a look of the example of page 55, example 5. Okay, in this example, this is an extract of sales journal. So I will show you a sales journal, which is for a business of April 2018. Okay, now we go to the sales journal and have a look. So in this sales journal, we can see that it's very much a simple journal, which is having a column in the left, in the first column, put the date, and then the details. The details actually indicates that who is the credit sales. That means the customer name. All right, and then the invoice number. Remember in the invoice module, we mentioned that when we have a credit sales, we will issue invoice. So you need to indicate the reference number of this invoice into this particular sales journal. It says that the reference number is what. Like this case is 1011. This is the number and the amount of the sales invoice. So this is sales journal, how it looks like. So I hope this is clear for everyone. All right, so in this example, it asked us also to post the entry. That means post all this sales journal entry into the sales ledger account. So it says that sales ledger account for individual. That means I need to post to Khaled's account. All right, so we go to create a Khaled's tier account, which is sales ledger. All right. Yeah, there may be people still confusing about ledger journal. Okay, so now we're very clear that this is journal, and after journal, we need to post into the ledger. All right, so this is how the ledger looks like, and then it's for April, and then it's sales in 85 for the first transaction for Khaled. Okay, and then the other one, which is Farida. Okay, Farida. Oops, spell error, but you need to know Farida. Okay, it's the same, 12th of April, and then sales, and then this is 160. And lastly is, not lastly, actually the second last, 19th of April, and then sales, 210. All right. Okay, and then the next transaction, this one, 28th of April, 56. Okay, 25th of April, again, sales, and then this is 56. All right. So all this is a individual, we call trade receivable. Oh, is my sales, right? My company sales is trade receivable ledger. So all this Khaled, Farida is trade receivable. I'm expecting to receive the money from them, but which is I'm not sure. In this example, we didn't do any cash or bank, so we don't know whether we receive the money or not. But this is very sure that this is the sales that happened of the month. All right, and now we need it says sales, right? And then it's not balanced, right, in this ledger. So by the end of the month, we need to post into the nominal ledger account, which is the title as a sales, which is here is sales, here is sales, right? 30th of April, and then is sales journal, and the total is 511. 511, you total out 1, 2, 3, 4. These 4 of them, you will get 511. Same goes to here, 511. So it's the same thing. Over here, I transfer to sales account, and here I transfer to sales account. So this is coming from sales journal. All right, so this is the sales journal and also sales ledger. This is how it works. I repeat one more time how the process is. In the beginning, whenever there is a sales transaction, I got from invoice, which is the business document. And then I record it down into the sales journal, who is the trade receivable, which is the customer name, all these things. And then my next step is to transfer each one of them into the sales ledger, particular ledger account, which is the customer account. And then at the same time, I must transfer the total of it into the nominal ledger account, which is the name of sales. And then from the sales journal, come to sales ledger. So this is the account. So we are learning up to this process. I hope this is clear to you. And let's go back and then to continue the topic for this video. All right. So this is one of the things that I want you to have a second thought. A business sells a vehicle which has been used by the business on credit. In which journal do you think that this should be recorded? All right. A business which is purchased a vehicle for their own use, and now they decide to sell the vehicle, right? So bear in mind that this is not considered a sales. It's not, because this one you purchase for your own use is an asset. So this vehicle is an asset. It's not you purchase the vehicle and then for resale purpose. So we don't record it in sales ledger. We don't record in the sales journal. No, we don't. All right. And then it says that it's by credit. Credit, that means that last time I buy credit it can some company agree that I can pay later or something like that. All right. So there is a trade payable. This transaction is about my asset, which is a vehicle, and then is about my trade payable, which is like my liability. All right. Okay, so you see, I sell the vehicle, which is originally vehicle is an asset, is in debit side, and now if I sold the vehicle, it will be in the credit side. So there is a double entry happen in the asset account, which is nothing to do with sales journal and sales ledger. All right, so I hope this is make it very clear to you, and thank you very much, and then I see you in the next